Ladies and gentlemen, good day and welcome to Omnitech Engineering Limited Q4 and FY26 earnings conference call hosted by Equirus Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Shah from Equirus Securities. Thank you, and over to you, sir.
Yeah. Hi, good evening, everyone. On behalf of Equirus Securities, I welcome you to the 4Q and full year FY26 earnings conference call of Omnitech Engineering Limited. We are pleased to have with us management represented by Mr. Uday Kumar Parekh, Chairman and Managing Director, Mr. Paras Parekh, Chief Financial Officer, and Mr. Bhavin Acharya, Chief Revenue Officer. I will now hand over the call to the management team for their opening remarks, which will be followed by a question and answer session. Thank you, and over to you. Uday, sir.
Yeah. Good evening, everyone, and very warm welcome to all of you. Thank you for joining the Omnitech Engineering earnings calls for the quarter 4 and financial year ended 31st March 2026. I'm Uday Parekh, Chairman and Managing Director of Omnitech Engineering. Thank you for joining the call. Along with me, Mr. Paras, Full-Time Director and CFO, and Bhavin Acharya, who is our CRO. We hope you had an opportunity to review our investor presentation uploaded on the stock exchange and on our company's website. During this call, we'll discuss the financial performance for the quarter 4 and financial year and March 31st, 2026, along with the business development across the three verticals, order book position, and operational growth initiatives. FY26 marks another significant milestone in the Omnitech continuous growth journey, reinforcing our consistent growth trajectory and execution-led business model. During the year, company have delivered healthy growth in the revenue along with the profitability, significantly expanded our manufacturing capacity, and strengthened our order book across the key strategic sectors. We have deepened our engagement with the global OEM through significant qualifications-driven and high-value engineering programs, further validating our technical capability and customer trust. Growth and execution continues to remain the cornerstone of our strategy. Our focus is on building a scalable manufacturing capability, strengthening long-term customer partnerships, and enhancing operational excellence to drive sustainable growth. With the disciplined execution, continuous capacity expansion, and strong customer-centric approach, we remain well-positioned to create long-term value for all the stakeholders. With this background, I would now request to Paras to take through you financial performance in the detail. Thank you, everyone.
Yes, thank you, Uday. Good evening, everyone. Thank you for joining the Omnitech's earnings call for the quarter and financial year ended March 31st, 2026. So let me take you through the financial highlights for the Q4 and FY26 on the consolidated basis. If we go for the FY26 year-on-year, our revenue grew 49.1% to 511.3 crores. EBITDA rose 45.4% to 171.1 crores. Profit before tax nearly doubled, up to 92% to 107.8 crores. Profit after tax increased to 80.9% to 79.3 crores, with a PAT margin improved to 15.5% from 12.8% last year. These results underscores the resilience of our business model and effectiveness of our growth strategy. If we go for the quarterly performance, we continued to deliver strong momentum. Revenue grew 38.5% to 148.7 crores. EBITDA increased to 15.9% to 49.7 crores. PAT rose 43.4% to 29.3 crores, with margin holding steady at 19.7%. This consistent quarterly performance demonstrates our ability to sustain growth while investing in the capacity and innovations. Now, if we see for our balance sheet remained robust. Net debt to equity improved to 0.34 times in financial 26 from 1.6 times in financial 25, reflects strong cash generations and prudent capital management. Our return on capital employed, ROCE, was healthy at 13.7%, while return on equity, ROE, stood at 11.7%. Additionally, our GST credit stood at rupees 24.3 crores as on April 26, which is expected to realize in this financial year, supporting our future cash flow and increasing liquidity in the system. We continue to prioritize disciplined capital allocations, balancing growth investments with shareholders' return. Now let me provide some context on our key ratios. If we go for the ROE stood 11.7% from 21.6% last year. This was primarily due to a sharp increase on equity base, which expanded from 203 crores to 679 crores, which was through the IPO process. While profit grew strongly, the larger capital base diluted ROE. This reflects our conscious efforts to strengthen the balance sheet and reduce leverage risk. If we go for the ROCE moderated slightly to 13.7% from 16.1%. The decline is then caused through the sharp increase in our equity base as mentioned before. These investments are strategic, meant to capacity expansions, and we expect ROCE to improve as these assets begins contributing fully to revenue. For the net working capital days, let me address the working capital positions in detail. The increase in working capital days to 294 is elevated, and I would like to explain the key drivers behind it as well as the actions underway to improve it. The increase in inventory days is primarily linked to the initial ramp-up of our new programs, where minimum order quantity, which is MOQ, commitments with our key material suppliers led to higher inventory buildup. This should be viewed as a strategic investment to support future growth and customer executions rather than inventory stagnation. Our receivable days at 153 on a consolidated basis were largely influenced by our strong Q4 revenue concentrations. A significant portions of revenue was billed during the February and March, and these receivables remains with contractual credit terms and are already progressing through our collection cycles. On the liability side, the payable days improved from 64 days to 80 days during the year, supported by our leveraged vendors, their recognitions, and a stronger supply chain alignment. Going forward, we remain focused on optimizing working capital by the end of this financial year through three specific levels: inventory rationalizations, normalizations of receivable cycles, and continued payable optimizations through disciplined executions and operational planning. In overall view, if we see the FY26 has been a landmark year at Omnitech Engineering Limited. We have delivered strong financial results, improved profitability, and strengthened our balance sheet. Our investments in capacities and working capital positions us for sustained growth. We are confident in creating a long-term value for our shareholders. With this background, I will now request Bhavin Bhai to take you through the business updates. Thank you. Thank you all.
Thank you, Paras Bhai. Good evening, everyone. Let me take you through the business update, our revenue mix, the pipeline across new segments, and the growth visibility we are seeing ahead. Our financial year ended on 31st March. Our revenue profile remained well diversified. Energy contributed 53%, motion control and automation contributed around 25%, industrial equipment contributed around 16%, and others contributed around 6%. Even in geographical location-wise, North America contributed 53%, India contributed 24%, Asia contributed 19%, and Europe and UK contributed around 4%. This reinforces the export-led nature of our business while also showing a healthy spread across end markets and geographies. The key message is that the pipeline is widening and several OEM relationships in our priority verticals are moving from qualification stage into the engagement stage. The order book as on 25th May 26, more than 3,000 crore of order book has been indicated, and a strong order book flow is going on. Opportunity pipeline continues to be robust. Omnitech's existing plants at Metoda and Chhapra has been certified for aerospace AS9100, and we have also initiated NADCAP certification process for surface treatment, NDT, and welding, marking another important milestone to get into the aerospace sector. There are already 4 FA development orders being received, marking a key step forward in defense and aerospace segment. In FY27, 3 concurrent initiatives will underpin the forward strategy. This is of commissioning a new manufacturing facility in Hyderabad, expanding operation at a proposed new facility at Chhapra, and implementing a solar roofing at the existing Chhapra plant. These initiatives are intended to support future scale manufacturing resilience and operating efficiencies. Our order book continues to be one of the clearest indicators of growth visibility. It has grown from 57 crores in FY23 to 83 crores in FY24 to 283 crores in FY25 and now to around 3,000 crores as of May 25. Importantly, this includes the multi-year Weatherford order, which is more than 900 crores. The order book mix is currently by energy at 74%, followed by motion control automation at 14%, and industrial equipment is standing at around 12%. If we look at the geography-wise mix, North America is contributing around 64%, Asia is around 34%, India is around 1.5%, and Europe and UK is around 0.5%. We believe the combination of a stronger order book, capacity expansion, and working capital availability places us in a good position to continue scaling the business. And for those who have joined us newly, I'll quickly give an overview of Omnitech, that we have been in business since last 19 years. That is our operating history, with over 256 global customers, sales in 24 countries, and about 75% of our revenues coming from outside India. Our order book stands today at around 3,000 crore plus, and we operate from manufacturing facilities with an annualized capacity of 26 lakh hours and growing steadily. And the precision capability is up to 5 microns. So our growth journey in FY26 has been remarkable. We believe the combination of stronger performance, a significant expanded order book, growing capabilities, and disciplined execution gives Omnitech a strong platform for the next phase of growth. On behalf of the entire Omnitech team, I would like to thank you very much for the support and confidence you have shown. We will now be happy to take your questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Pranay Roop Chatterjee from Burman Capital Management. Please go ahead.
Hi, good evening. Am I audible?
Yes, please
sir.
go ahead.
Hi. My first question is specific to the total opportunity within oil and gas. So, what I have been struggling with is to quantify the total opportunity available for a player like you in India. I understand the story of geopolitical supply chain de-risking and China plus one, but while all that is great and the numbers are in billions of dollars, that is the market size, I think that addressable or given the capacity constraints and the technology constraints and the slow nature of getting new certifications, building new capabilities, the the opportunity is actually capped at a much lower level, is my sense. But what I have not been able to do is quantify it. So if you can help me with a few data points, and I'm sure you guys track it, for the oil and gas services players like Schlumberger, Weatherford, and Halliburton, what would be the total annual procurement from India for precision machine components? Like, I have a number, but I thought I'll just ask. And, where can this number go in the next 3 to 4 years? Because the feedback I received is that while the global procurement is massive, there is a technological cap to how much can be shifted to India, because of the ecosystem of raw materials being non-existent. So if you can just throw some color and if you can quantify the total opportunity as it stands today.
Okay. So let me answer. So when we talk about the addressable market, yes, you are very right. The addressable market, the headroom is extremely high, and the numbers are basically in billions, right? On the spends of global spends, what they have on different markets, different geographical locations, and so on and so forth. Now, to give you a quantify number, it is a bit difficult because having said that, we need to assess, different capabilities, different geographical locations, and so on. Now, when we talk about particularly India going forward, the kind of headroom what they have given us, because see, these are some of the numbers are not divulged officially, or some of the numbers are not given directly by the companies like SLB, but there are n number of customers, and SLB, Weatherford, Halliburton are just some of the customers. There are many more companies, be it in the system, like NOV or Technip FMC or, mid-level players who are already in the system and in the market, who also has this policy of giving the business in India. In relation to the capabilities, I feel that India is today more or less ready to support and to give. Say, for example, if I talk about Omnitech, Omnitech has the complete capability from machining to surface treatment to, giving them sub-assemblies and assemblies today. So when we talk in a specific, criteria of capabilities, at least I can talk from my standpoint that Omnitech can deliver the kind of product line what they would require. So having said that, to give a quantification of any numbers, it is very difficult because those numbers are technically not there yet. But the business, kind of business, what is being coming to India and what it will come going forward as well, because of the geopolitical situation, because of, US expanding, because of Venezuela coming in, there is a lot of opportunity within the oil and gas, which we going forward, if you look at the market size and the market, requirements, there is a very, very good potential going forward. So that's where we are.
Got it, sir. So my second question is also in light of the massive oil and gas order book that you have. Now, obviously, given your current scale, the order book is massive, and I can imagine how difficult it must be to, get all the things in place, expand your capacities, then execute the orders. The quality requirements are pretty high. You need to ensure everything is, in terms of deliveries are timely. So from a perspective of FY27, which is literally the next 4 quarters, what is your priority? And is it to focus on executing what you have in the order book, or will you also be going out and looking for further opportunities? Because if I were to think, obviously you have announced Hyderabad as a new location, but in Rajkot, I'm sure it would be tough to attract and retain a large number of top talent, or rather technical staff who know about oil and gas. So I'm not sure if you are facing any challenges in respect to that. But what is the near-term priority? Is it first execute the book and then think about getting new orders, or you have everything sorted and, getting new orders is not a challenge anymore?
No. So first of all, there are no challenges at all. I'll tell you why. See, business is available. Yes, you are right that business can be captured as much as you want, but then the execution and there might be certain challenges. So if you see our growth trajectory, we have taken orders when we felt that we are capable enough to take the orders and, we would be able to deliver and execute those orders. Now, if we talk about particularly 2-3 things what you have addressed in one question, one is the Rajkot base. See, Rajkot has one of the largest machine tool companies and the complete ecosystem in relation to forging, castings, and even machining within Rajkot. So the skill set available in Rajkot is extremely good, to be honest with you. Having Hyderabad as a location, that is a second subject, and that is a separate matter in relation to geographical base, being closer to the customer and those kind of aspects. So it has nothing to do with the skill set of the people, because in Rajkot, we have an extremely skilled people, and also people, we are very diversified enough where people from different geographical locations are also moving to Rajkot and being part of Omnitech. So that aspect is also, well taken care of. And when we talk about executing of these large size orders, see, we have taken these orders on a conscious basis that it's not a kind of a spot business. It is a 5-year long program where we have given them a kind of, a ramping up timeline, that how much we're going to do it this year, how much we're going to do it next year. And we're going to gradually grow into that, executing and completing those 5-year timeline as to, we are not going to complete entire 200 crores today. So it's going to be, relatively, say 50 crores, then 100 crores, then maybe 200 crores, then 300 crores, and so on and so forth. So I'm just giving you a brief, assumption numbers, but it's going to be a gradual ramp up, and that is taken into account with the customer, giving them the confidence that this is how we're going to invest in new capabilities, this is how we're going to invest in the new machineries, and this is how we're going to ramp up the programs. So it's all been taken care of accordingly.
And adding to one point, we are open to take more orders based on the value propositions where we want to head it out. See, on the value proposition side, like assembly, testing, and 2 steps of more product lines. So we are already working with the customers to adding more value-added product into the basket. So we are consciously executing this order book, but parallelly working for acquiring the strategic order book, which we are planning to execute in the furthermore years.
And one more thing I would like to add over here, that if you look at the investor presentation as well, you will see that we have also opened up with new customer base in new industry segments as well. So we are working on different areas also simultaneously and ensuring that we bring in new customers on board as well. Thank you.
Got it, sir. Is it possible to chip in one question, or should I go back into the queue?
Mr. Chatterjee, please go ahead.
Yeah, sure. So actually my third question was what you were already addressing, which is outside of oil and gas. You mentioned aerospace, you are doing qualifications, and I think Oshkosh is already a client, and you are present in the ground support equipment space. How as investors, how should we look at aerospace for you? Where are you in the journey? Like, for example, oil and gas, I'll say you are probably early but maturing stage where, you have an order book, customers have approved you, and it's all about scaling up and, building on the momentum you already have. When do you think you would have similar momentum in, let's say, aerospace or any other segment like you have in oil and gas right now?
sir, when we talk about oil and gas, I would say probably we are one of the most matured business houses today in relation to our peers. So that is where we are as far as oil and gas is concerned. But however, aerospace is concerned, we are relatively, fairly scaling up. Yes, in airport ground support system, we are very strong because we have been working with these customers since a very long time. But when we talk about pure aerospace in particular, more in detail, then yes, we are building our capabilities, building our ecosystem, and we are pretty sure that the way it's headed and the way we are in discussion with certain clientele, you will see definite growth in the coming years.
And
Thank you,
I
sir.
like to, yeah, sorry.
Sorry,
Go ahead. So, if you see the capability metric of the aerospace and defense of the peers, and if you see our capability metric in terms of size of the compounds, in terms of the, like 5-axis machining, in terms of the surface treatment, in terms of the NDTs, in terms of the infrastructure availability at already ready at Omnitech. So if you see, there will be the capability requirement, there will be some certification requirement, and there will be the talent requirement, which can understand that type of forms and everything. So you can say we are in a good position into that sector also. But yes, we should have enough capacity to execute parallelly everything. So we are going step by step over there.
Got it, sir. Sir, I have covered all my questions. I think you guys have done a phenomenal job, and getting 2,000 crore worth of orders from global giants is not a joke. So I think all I can say is all the very best in terms of executing and winning most of the orders.
Thank you, sir.
Thank you.
Thank you. Next question is from the line of Nirvana Laha from Badrinath Holdings. Please go ahead.
Yeah, good evening. Thanks for the opportunity. My first question is on the Weatherford Master Purchase Agreement that you announced in March. So this is still a Master Purchase Agreement, right? The client has given you a schedule of, proposed orders. These are not confirmed yet. So if you can help us understand, like this 184 crore per year schedule, how tentative is this? And is there a possibility of deferment or cancellation of orders? And when is the execution about to start?
Okay. So let me take that. Weatherford is already our existing customer. And these types of master purchase agreement and master supply agreements, like customers works on the long agreements with their end customer like Aramco, ADNOC, Petrobras, and similar like that. So based on those orders, they book their supply chain for certain suppliers. So that is one replicate effect of the order with us. But apart from that, we are already existing customers, like we are already working with the Weatherford. So this is, based on their yearly requirement and based on their quarterly requirement, it is going to be executed. Yes, there will be some ramp up time, first year, second year, third year, fourth year, and fifth year can be mature. So there will be these types of, this is the order type.
Sure, sir. So just to understand, how should we think of the ramp up? You've announced a 900 crore MPA. How should we think of the ramp up, say, from FY27, FY28? If you can guide on some numbers that we have.
See, some of the, some of the more information is more confidential. So, as you know, these are all the American and these types of customers. But you can say, just an example, 900 roughly crores and 5 years is a program. So you just, maybe 70% on first year, second year, 85, and like that. Similar, it will go like that.
Okay. Got it, sir. And in the DRHP, sir, you have announced another almost 1,000 crore order that you have received also from an oil field service company, I think. So if you can give us some details on this, like when does that order start? Is it also an MPA? And is it which Schlumberger? I'm just guessing. So if you can give some more details on that, and when can we see those revenues starting? Is it FY27 or will it be FY28?
No, it will be starting from the FY27. So that is also similar in nature. Let me give you another, more context. Like when they get some more larger order, they has to book their supply chain because that is their end customers. There is a commitment to deliver that is in the 5 years, 10 years to the Petrobras or any of the customers, So similar, there is a requirement for the material also to fulfill their end customer product and services and everything. So this all program is going to start from FY27. Like some product line can be start in this year, some product line can be initiated in the early beginning of FY28.
Got it, sir. And either of these orders, are they linked to Middle East end clients, and do you see any possibility of disturbances because of what has happened in the Middle East recently?
Yeah, there may be some of the portions can be linked with because see, these all more or less that they are governed from the US headquarters. So basically, sometimes we do not know on the third year where it is going to be go and like that. But see, till today, crossing the fingers, we don't have a overall challenge on any of the Middle East supply, except like a one or two small challenges of the delay of the shipment, transit time, or something like that. And these customers, if you can understand, like they have a very wide, they operate more than 100 countries. If you go to on their websites and everything, they operate in a very wide area of the, geopolitical, like geographies and everything.
Sure, sir. Sir, one question on your CapEx. So as per the DRHP, you were bringing up 2 facilities in Rajkot itself. Now, today in the presentation, you've mentioned about a new facility in Hyderabad. So few questions on this. First, if you can help us understand, like these 2 big oil field orders, are these new Rajkot capacities linked to the oil field order execution, or do we already have enough capacity to execute these orders? And secondly, this Hyderabad facility, what is this about? And when are these facilities going to get commissioned, all these 3 facilities now that we have announced?
So Hyderabad is basically lease property, and it's you can say like being a more closer to the defense side of the customers and other customers over there. So this is a pretty small units to give the extra more comfort to the customers. So we have a good enough capacity at our existing plant, and along with the IPO proceeds, we are also building up a 2 facility in the Chapra. So there is enough capacity for the execution of the order, and wherever from the next year on after the Q1, our new facility will be also start ramping up.
Got it, sir. Final question, sir, from my side. What kind of growth are you looking forward to given the large order book that you have in FY27? And in Q4, we saw a sharp gross margin compression, about 450 basis points against the last 2 quarters. So if you can comment on whether this is a one-time thing and whether, margins will revert back to the earlier margins that we were reporting in the last 2-3 quarters. And in terms of passing through prices, right, if steel, etc., the prices are going up, what kind of arrangements do we have with our customers? Are we able to pass on prices immediately? So 2 questions, one on growth for FY27 and second on margin.
See, hi, this is Paras. If you will see about the growth, then growth will be as per the previous years. If you see the historical, in historical last 4-5 years, it is between 30 to 35% of growth. So we are looking the similar growth in the previous years also, in this years also.
See, our order book is like a very strong order book. We have this year of growth capacity is also there. So we are projecting, anticipating good growth in this year. And also coming years, we are also investing on the new capacities for the further of the years.
Sure, sir. And the question on margin?
Yeah, margin will be the similar as per the historic.
Okay, so this quarter was an aberration, right? We'll go back to better margins from further quarters?
Yes. Actually, as we are in the growth journey, so many of the costs we have already start incurring in the Q4 and, end of the Q3 and like that, because, FY27 is also our growth trajectories and everything. So many of the costs we have already start incurring, and that will going to be, give the result in FY27, So we have to keep on investing on certain resources, people, key talents,
Got it, sir. Thanks a lot. Congratulations on the great results and all the best.
Thank you, sir.
Thank you, sir.
Thank you. Next question is from the line of Santosh from iThought PMS. Please go ahead.
Hi, sir. Am I audible?
Yes, please go ahead.
So I just have one question on the existing facility. So, we've been able to grow our capacity year on year, let's say by 40 or 50%. So how much more can we get out of this existing capacity?
Can you repeat once? Okay.
Yeah. Hello?
Can you repeat once? Sorry.
Okay. So we've been able to grow the existing capacity by 40% year on year. So how much more can you get? How much more can you get out of this capacity, existing capacity?
See, normally, without expansions also, like FY27 is overall covered with a very few bottleneck machines can be invested. But overall, we have to plan at least in the year ahead of our execution. So we are overall covered with the FY27 and near to the FY28 early for Q1 and Q2. And till the time we are also building up the new capacity. So that has to be hand in hand to build the capacity. So if you ask until the new capacity comes, we are very good having enough capacity to execute the growth for the FY27 and early FY28.
Okay, sir. Understood. So you also procured a land for additional capacity beyond FY28. So do you have any numbers in mind, any numbers in mind, how much capacity you want to put on, let's say, in the next 5 years, apart from the proposed facility?
See, yes, we have, acquired a new land in Ahmedabad for our future trajectories of the growth, because beyond FY28-29, we may need to have one more geographical location to support our customers and attract the talents and everything. So, this growth will remain always in the, target. So we have to keep on investing on certain thing in the early stage whenever it is available. So there will be the good numbers, because if you see the comparison of the size from the DRHPs, what are our existing capacity square meters, what are the new, so you can find some ballpark numbers or something like this. This is a high level numbers, but there is a growth trajectory over there also.
Oh, okay, sir. Understood. Can I just squeeze in one more question?
Pardon? Can you repeat?
Sure, please go ahead.
So apart from this big order from Weatherford and the other client, which is 1,000 crores, how much of the order book is actually repeatable from this? Do you have any visibility on that front?
So overall, roughly, motion control and automations and industrial equipments are a short order cycle of the customers. Like they place the order before 3 months, 4 months, and similar like that because of the nature of that industries and like that. So our more than 90% revenue comes from the repeated customer base. So if like these order book, apart from the repeated customers, historically, if you see our numbers of last 2, 3 years, we have a pretty good repeated customer base. And how we calculate the repeated revenue, if we added the new customer in this year is a new customer, but next year, if we do the same customer, same product line or same revenue with that customer, we consider as a repeated revenue customer. So that is also pretty significant, more than 90% of the motion control and automation and industrial equipment side of customer base.
Understood. But my question was more on the additions to order book. Let's say you have around 400 crores of order book in motion control right now. So how much of this is exactly repeatable in the next year or the next year on that front?
No, so there are two things in this. One is what Uday bhai mentioned, that we have the repeat customers. So these customers which are already there are giving us the repeat business, and that is what we are working on. In addition to that, we are already having new customer base which is being added into motion control industrial equipment in ongoing year. So those are the new customers which are probably at a FA level stage, or which are being, we are being onboarded onto them. So you will see those customers coming in next year or a year after next as we go forward. So that will keep on adding as far as the customer base is concerned.
Yeah, sir. So understood. Thank you.
Thank you.
Thank you. Next question is from the line of Nikhil from Toro Wealth Managers. Please go ahead.
Good evening. Am I audible?
Yes, please proceed.
Yeah, hi. So just wanted to understand, Weatherford at, say, full ramp up, we had probably said that it will be around 250 to 300 of an annual run rate. What kind of EBITDA margins would be embedded in this contract, if you are okay to share?
So, this is a very common background, platform. So we cannot able to share that. But, we have overall policies average of the EBITDA we are trying to quote to our across the customer base, probably 1 or 2% up and down. But this is just the average of our customer base.
Okay. No worries, sir. And second question is, sir, on the development orders, which we probably mentioned for defense and aerospace, without probably naming the customer, what a tier of the customer they are like, and what component category these orders are for aerospace, and with respect to the raw materials, would you be machining Inconel, titanium, superalloys? Just trying to understand more on the perspective with respect to the orders that we disclosed.
Yes. So it is a combination of both. So it is a tier 1 as well as the OEM. And we would be doing different material grades, particularly on the aluminum side, a little bit more. And then, of course, the relatively material grades of titanium as well. And in addition to that, there are some stainless steel materials as well. And those would be different machine components for different applications, as well as a little bit of I would say, sub-assemblies. So there would be some welding portion as well as some sub-assemblies in relation to the requirements. So it is a combination of couple of.
And what? Yeah, go on. Go on, sir. Sorry.
So apart from that, there is some S&P and, just for Inconel and titanium, we do machine the Inconel, titanium and aluminum a lot of into, our oil and gas industries and like that. So we have a quite good range of the machines who can machine the Inconel and titanium. So we are like our capability is already ready for the defense segment of the handle titanium and Inconel,
Okay. All right. All right. And sir, last one is just wanted to understand what kind of revenues can we expect, like in maybe say 27, 28 from the aerospace vertical?
So at the moment, we would keep it at what you are seeing right now in the growth level. We would be, you know, because this has a long cycle time and long lead times in, getting the FA approved, getting the process aligned. So to give you some kind of a number today would be really difficult. But we are headed in the right way and the right direction. And I'm pretty confident that you will see some good numbers even in FY27 going forward. But that we will see in coming months and coming quarters.
Got it. Got it. And just, yeah, sorry, sir. Go ahead.
Yeah. So adding to that, last year also we have executed some FAs and that revenue has been already booked in last year. So that is also so this year also expecting to good growth into these segments.
Got it. Got it, sir. And sir, just last one, if I can. What kind of risk that to our scalability do we see? Probably, we have got good visibility on the energy as well as now on the aerospace front also. Anything that probably can deter our growth or probably deter our scalability in the coming 2 to 3 years?
See, we are anticipating and we are working on the execution plan. Roughly around 30% plus of the, like how can we trying to grow plus or minus 5% is like that. But we are we have an order book, we have a capacity, we have a very strong relationship with customers. We have already a program has been approved or sample has been approved or life cycle test or everything has been completed. So more or less we are projecting to grow with good numbers of the growth trajectory for the next coming years. And we are parallelly adding FY28 onwards, we are also adding the new capacities where the capacity can be our bottleneck for the growth beyond the FY29 or something like that. And we have around 2.6 million number of hours. With the new capacity will be around more than 4 million number of machines hours. That will allow us to grow our capacity. Apart from that, our existing plant and existing some of the installations, we have a very good enough spare capacity because to build the capacities, it takes some time. And that time reasonably we have already covered up in the FY26. So we are projecting good growth in FY27, 28 and beyond that also. And we are also, adding to that, we are also adding more segment also like aerospace defense and that will be also giving the more growth leverage in the coming years.
Wish you all the best. I'll come back in the queue.
Thank you.
Thank you. Next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello.
Darshil,
Good evening.
please go ahead.
Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. So, sir, just wanted to understand in our industry, are we able to, pass through the raw material cost easily or, some lag, we get the price escalation? Can you comment on that? Because due to the recent geopolitical conditions, are we impacted somehow, like in terms of either deliveries or, in terms of pricing, sir?
Okay. So when we talk about passing of raw materials, that is a very given in our line of business. So usually it is considered that whatever there is an increase or impact on any situation, that will be passed on, particularly if we even talk about the logistics side of it. Everything, most of the business, what we do is all ex works. So automatically, certain risk and factors are already been accounted by the customer on this kind of geopolitical events. In the event of raw material pricing and so on, that is also very much, passed through. So this is all, it's going on. And this industry per se, for everyone, it is more or less the same. So it is well in line.
Oh, okay. That's really great to hear, sir. And I just wanted to understand in terms of seasonality of our business. So is H1 a bit lower and like what could we expect like that, sir? Is H2 higher execution period? What do you feel, sir?
I think, like if you see, overall you can say plus minus 5-10% of that type of like a December is a year end for the export customer. Sometimes they are on the lower inventory, so probably, October or November. But again, that will go by the November to reach to the January. So if you see roughly there is no seasonality, like quarter on quarter.
Oh, okay. Okay. That's fair enough, sir. And I just wanted to understand, like, in terms of, like, our exports to North America were such great. So even in a year where tariffs were, imposed on us, we've done such a great number. So going forward, like, we can have even better growth out there because even that part will not be a constraint on our customers. So can we do better than the 30-35% growth that we are expecting? Can it push towards 40-45% in the coming years, sir?
So see, during the tariff also, there was not a major impact as far as our sales was concerned to US. And overall, if you look at the market as well, the market size is definitely very, very big, and we have been doing pretty substantial in US. But likewise, we are also, working our way into Europe, UK, and other regions as well on how to scale that business and how to make sure that, we diversify ourselves into different industry. But nevertheless, US has been a good driver, and we are working on it to ensure that whatever we can capitalize, and these are all precision product lines. So even for customers, it is not that easy to change over. So they will have to stick to us. There is a very high stickiness of these customers, and we'll have to, continue doing what we do. So we definitely see that US will play a decent and a good role for us.
Okay. That's right. So just like, so wanted on, like, in terms of revenue growth, we're just asking if we've done better in the past. That's the only reason that we are asking you. And FY26 has been much better than 30%. So just wanted to understand with current stickiness of order book as well as the new approvals that we are going for. So we can have a higher growth, right? Even if you don't want to quantify it as a number, but in terms of just pure this, we can have a better growth, right? So.
Yeah. So there is a headroom to have a better growth. So, we obviously, like our present plant have a rough, this is a very high level, you can say like 750, 800 and more based on the, material mix and everything. And additionally, we are adding another 1.5 million of the machining hours that will give us some more capacity for, FY29 onwards. So the headroom is good, like, and these customers, if you consider, like, there are more than 35 billion of individual customers. If you, like, totally, their total put together is more than 100 billion of the customers. Like, I'm talking only oil and gas. But in energy, we have also included an oil and gas and some of the non-oil and gas, like, we have some other energy customers also includes in the energy division. So there is a very good demand in that segment and everything. Order book is already full. So there is a very good headroom for the more growth.
Okay, fair, fair. That's it from my side. Thank you so much. All the best.
Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the question queue, please limit yourself to one question only. Should you have a follow-up question, please rejoin the queue. Next question is from the line of Sheila Ditya, an individual investor. Please go ahead.
Hi, thanks for the opportunity. So, regarding one question on the growth we are comparing to the last investor. So as I understand when you explained, the order book is like very large compared to our current revenues, and also the capacity is there. So basically, what I want to understand is what is kind of stopping us from growing faster? And that is the question. And then on the margin side, there is a big drop. So can you explain a little bit more on why the 5 to 6% drop in margin happened?
Roughly, if you see in last 3 years, just a high level, like 178, 180 to 500 plus we have done in these 2-3 years of the growth, and we are anticipating the good growth in the coming year. So that is just, overall on the growth. In terms of the margin, when we are, investing heavily, like if you see our interest and many of the costs which have been already incurring in the FY26, and we have to keep on investing on the new capability investment. If you see what level of the capability we have developed, what level of the first article we have done in the last 2-3 years, especially in the FY26. So that is giving the more result for the growth beyond FY27. So that expense has been already accounted into the, P&L and everything. So on an average, we are in the range of 30 to 35% of the EBITDA and like that. So that is overall guidance, overall presence.
So shall we assume around 34-35% going forward as annual basis? Is that fair assumption?
So see, we are targeting that. We are working on that.
All right.
So we are following the same as we are following the historical base. The same we are planning for the next few years also.
All right, sir. And basically what you are saying is that the growth can be more than 30%. You are kind of taking that as a baseline, right?
Yeah, we are also targeting this similar type,
Thank you. Next question is from the line of Aman Vij from Astut Investment Management. Please go ahead.
Good evening, sir. Just two questions from my side. First, the contracts we have with Weatherford and one more customer, which is multi-year contract. Could you give a rough estimate in terms of components versus assembly? What is the mix for both these customers individually?
So, this is a very public domain, so we may not able to declare that, but there are good numbers in the assembly portion also, in the one of the orders, one of the around 1,000 crores of orders. And for that, we are already investing on the 17,000 PSI of pressure testings and everything,
But rough range will be, in my understanding, Weatherford is mostly component, while the other contract there is a good portion of assembly. Is this understanding correct?
Yes, it can be, yes. But see, now we are almost more on the higher side of the value chain. If we are giving all the subcomponents to the customers, so they have to add only one additional top-level BOM part number into taking from the assembly. So first they can move to the kitting of the product, and then they move to the assembly. So our goal is to move towards the more value propositions, you know.
Sure, sir. Second question is, are we also looking on adding more such contracts, multi-year contracts, maybe like you have done 2 already, but there are 2, 3 tier 1 and a lot more tier 2 customers available. So do you think in next 1 to 2 years we'll add at least 1 or 2 more such multi-year contracts?
Definitely we are working. So based on our capacity expansions and everything, we are working on the some large OEM and similar, getting that type of contract and everything. And not even on the, these segments, but apart from that, our, future strategy segment, which we have mentioned into our DRSP also. There also we are working significantly, to get these types of some of the good contracts.
Sure, sir. Final question. One final question is, in terms of, say, this actuator business as well as this new vertical like defense and aerospace, in the next 3 years, where do you see this as a percentage of revenue, these 2 segments? Because the 2 contracts we have will also scale very fast, maybe faster than the other segments. So, can you paint a rough picture in next 3 years, what can be the rough mix in terms of oil and gas versus defense and aerospace, and versus... And sorry, you mentioned defense and aerospace, there are 2, 3 customers. Is it mostly aerospace, or do we have some big defense customer also, if you can clarify that as well?
So in the defense side, we have some big customers in defense side. Also, one order we have also in the export defense. Because we have a very good network of our customers into, many of the countries. So we have got also the export defense order also. So we are aiming for the good growth in the aerospace and defense side, and that's how. If you see more about, again, stressing to the capabilities, again to the certifications, NADCAP is already in the process. And if you see our, value propositions to the customers, like we handle up to a 10 meter of the jobs, we do a smaller to a large size of the product line. So, aerospace and defense side of customers are really going to get and getting the good value from the Omnitech. So we are hoping good growth. Like it is very early to say you some numbers, but you can say we are aiming for the good growth in these segments also.
Sir, thanks for answering the question.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Yes. So thank you everyone for participating in today's earnings call and for your continuous interest in Omnitech Engineering. The company remains focused on disciplined education, capability enhancement, and long-term value creation. We sincerely appreciate the support and confidence extended by all our stakeholders. Thank you once again, and we wish you a very good evening. Thank you, everyone.
Thank you.
Thank you. Thank you.
Thank you.
Thank you, sir. On behalf of Equirus Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.